Hello, traders. Good morning. Welcome to Elite Currency. My name is Chris Svorcik, and we're going to take a look at automated trading systems, an update as usual on a weekly basis, plus any ECS news, of course, as well, and any updates basically in general. All right, so session number 18 already. We're getting into the last quarter of 2020 and 2.5 months left. Today, we're going to talk about three things I wanted to mainly discuss. Basically, one, the comparison between Ultima and Rush Ea, both systems from Mislav Nikolic, how a relatively lower ROI, return on investment, or profitability, like with the London Open Advance, which has an average expectancy of 5.7%, which for Forex and CFD standards, well, it's not super high, is it? I mean, it seems quite low. Of course, for investors, 5.7% per month is really, really high. You would never get that probably, right? But it adds up. It might not seem a lot on a monthly basis, but I'm going to show you the numbers after how it accumulates, how that cumulative effect can really grow an account. And funny enough, after 10.5 years, the return, when you compare it to the original capital, is mind-blowing. I'm going to share you the details, but you need patience. 10 years, of course, is not a small period of time, but it really adds up. And thirdly, a little bit more details about the Ultima EA and the risk it's taken as well. The risk it's taking in general when it's trading. I want to explain a little bit more about that so you're not surprised how it does that. All right. So I'll explain all of that in this webinar. As always, feel free to reach out to us to the Google form where you can already add your questions beforehand, or of course reach out through the chat box here in the live webinar. So I shared the link there in the chat box already. All right, so let me show you a comparison between Rush Ea and Ultima EA. Rush Ea from Mislav Nikolic and Ultima EA developed by Mislav and myself. And this is a very useful article. You can just go to our blog and scroll to the downside. You'll find it eventually as well. I hope it's still there somewhere here. 1st of October, Rush Ea. I'll share the link here in the live webinar. And this is interesting because it compares some of the aspects within Rush Ea, but also Rush Ea and Ultima EA, because some of you might be wondering, okay, which one is for me? Which one do I like? I personally think that there's nothing wrong with diversifying, and that's what I did at least. I put some capital on Ultima EA, some on Rush Ea. It's close to 50-50. I mean, that depends also on your risk appetite and how patient you are. You know, in my view, Rush Ea has a higher drawdown than Ultima EA, but on the other hand, the Rush Ea seems to offer more consistent gains on a monthly basis than Ultima EA. So we'll compare here. Of course, the higher risk you take, the more risky it becomes. Obviously, if it's traded with 5% risk, obviously that's higher risk than 3% or 1% risk per setup. That's logical. Let's go and scroll lower. So basically, how does 5% risk, which is for, of course, both systems, the max risk, right? So we're comparing max risk to max risk at this moment. So both are traded on the euro dollar. The Rush is on the 5-minute chart, and Ultima primarily on a 50-minute chart, actually, not the 60-minute. That's a mistake there. Both are with the trend, but there's a big difference in targeting. Rush Ea aims for tighter and closer targets, and Ultima EA typically, on average, aims for looser targeting. Now, that's not totally fair towards Ultima EA because the target actually does depend. Mislav built it in a way, Mislav and I built it in a way that the Ultima EA is aiming at different targets depending on the trend and if you're trading with that trend or against it, okay? But generally speaking, the targeting is closer. The win rate from Rush Ea is higher on average, as you can see, 10% more. The months in the back testing and live trading that the systems generated more than 10% profit or higher, right? 10% or more per month. 78% of the months had that with Rush Ea and 60% with Ultima Ea. Now, some of you are like, well, I'm not yet in profitable territory with Ultima Ea. I've been trading it for 6 months, right? And there are some of you out there that are like that. And I'll dive into that a little bit later, why that is so, or I can even do it right now if you want. Let me open up the account. Let's open that. So, but you can see Rush Ea has an advantage here, plus 78 versus 60, that's an 18% more. Winning months, so how many months we're winning? Obviously, if you don't have a winning month, you have a losing month. So Rush Ea, 89%, Ultima Ea, 83%. This is everything included, right? Back testing and live trading. So again, Rush Ea coming out a little bit better. And average gain per month, slightly higher there, but the difference is quite small. And the max historical drawdown, obviously Ultima has an advantage there because that is lower. So yes, Rush Ea has certainly advantages. Now, that said, I have to right away add that there are two totally different EAs. Rush Ea has a goal, in my view, that's how I'm going to trade it, is I'm going to put the capital on it, and I'm going to steadily grab the profits as they arise. So I'm not going to let the capital grow. I'm going to take the profits regularly. Whereas with Ultima Ea, I have a different goal, and that is to build the account. So I'm going to let the profits accumulate to a certain target. I think maybe even the first target could be, well, definitely 100,000 euros, for instance, before I would take some profit, right? At that point, I might take some profit, for instance. So there are two different goals. So I don't think the one is better than the other. I think that they have different characters and different purposes. And so I split it about 50-50 on both. One is, 50% on Ultima, aiming for long term, and 50% of Rush Ea, trying to generate shorter term profits. One could say Rush Ea a little bit riskier because of the drawdown. That said, there are also some advantages, as you can see in these stats, to Rush Ea as well. So I think a balance between the two is very reasonable in my view. Some kind of balance, depends on what type of trader you are. I think that for traders in general, there is some advantage of closer targeting. I think it's difficult for traders to see an open trade in profit and then go against us, right? That patience is very difficult, I think, for traders. Specifically with Ultima Ea, because Ultima Ea works like a big boom, sideways, 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 big boom, sideways, sideways. So that patience needs to be there. But yeah, Rush Ea is riskier in general. So that's the disadvantage. Maybe less patience is needed, but the risk is bigger. So I think a balance between the two is certainly something that is makes sense. Here's a 3% risk comparison. And of course, the 10% plus goes down to 71 to 55. Winning months is the same. Average month is almost the same. And max historical drawdown drops, of course, in both cases as well. But Ultima keeps the lead. So here's an overview. I'm going to speed up a little bit, not to bore you, but with too many details about these two, but I think it's useful if you're not sure. Rush Ea and Ultima Ea, well, it's basically here what I would explained. The conclusion basically between the two. This is profits, short-term profits. This is building an account, and here are the steps that we think are important. The differences and the average number of trades, 2 to 3 trades actually on Rush Ea. All right, then this is all discussed already in a Rush Ea separate webinar, so I don't want to repeat that. And here's information how to join. So I'm not going to repeat that. So you can find that info there. Regarding accumulation now, so let's move on. If you have any questions, of course, feel free to reach out. There was a question, a very interesting question about the LOA London Open Advanced. And its performance. So first of all, Ultima EA. So some of you who started, for instance, at the beginning of June or even beginning of July in this profit share model would have seen 2 or 3 months loss first, and then 1 month profitable. But that profitable month did not erase basically those gains. Even if you started maybe in May or even in April, there was some profit share sharing that needed to be done in these months. So you might be at break even, right? So that requires patience, and those a couple of months, 2-3 months where the account doesn't do much can happen. I had the same in the fourth quarter of 2019, in fact, and patience is needed. 2 to 3 months can seem very long, and I understand that, but that is part of the Ultima, that is needed with Ultima approach. Unfortunately, that is kind of the effect of trading Ultima EA if you want to trade it properly and you're aiming for long-term growth, because that's how Ultima EA achieves that growth. So, and the profitable months, 8%, 31, and 18, were not really enough to put everyone into positive territory. And maybe some are, I'm not sure. Depends a little bit on when you start. Everyone has a different starting moment, so that will vary. But yeah, the 2-3 months, of course, with negative territory, and the winning months not being super high, that's how we got into this situation at this moment. And I had the same in quarter 19, so quarter 4 in 2019, so that could take its patience. But so far, October is up, and let's see how this month closes. But hopefully it's a positive month, and we push it more clearly into positive territory, right? There's a difference between gain and absolute gain, as you can see. Different way of calculating. But really the most important is when you started. If you started here, beginning of June, you went through all of that and you're still down, right? If you started mid-July, you're probably up, right? Because it went up after that. So a lot depends on that. Anyhow, side note, I want to go now to talk about the LOA.EA and how did we even get to this topic. Someone asked a very interesting question, and I'm going to show you the backtesting of LOA.EA so that you understand that question. This is really fascinating, and that's how we got to sharing this topic. Okay, so monthly, as you can see, the monthly average from a month-to-month basis is plus 5.73%. Okay, so nothing stunning, not a wow factor. I think it's still very sturdy considering the fact that it's tested over 10.5 years. So for an EA to hold that long, I think that hats off, big applause for Nennet and Carlos, who worked on these stats and EA. Great job. So from that point of view, from the sheer length of it, I applaud them, right? But the number is not, let's say, super high, right? It's moderate, maybe low, whatever you want to call it. It's certainly not in the same ball game as Ultima EA and Rush Ea on average, right? That's so why would it be interesting? Well, still, the length of the testing is long. So there is a lot of history, which says, I think, makes it more sturdy as an EA. That's one. But second of all is the accumulation effect. So the drawdown is quite low, so it could be a very good long-term kind of approach with the LOA.EA, the London Open Advanced EA. Because if you leave the capital accumulate with that 5.7% month after month, and you start as simple as $1,000, it's going to eventually hit $1 million, as you can see, 1.3 million. Now, I don't know if I would leave the capital all the way to 1.3 million. I might withdraw some money at some point, right? But in theory, that's how it would go. I'm not saying that this is going to happen overnight. I don't want to be accused of any false accusations or false comments here, or overstating or overflating the EAs. I'm very, very cautious of not doing that. So I want to extra emphasize here that this is something that has accumulated after 10 and a half years. If you leave the capital there and don't touch the original, any of the capital, and just leave a trade. And I'm even adding, saying that might not be a very likely scenario for most of us, even for myself. But it just wants to prove the point that you can achieve a lot by letting the account grow if you have confidence in the EA. And I think it will do well in over years. If you don't have that confidence, of course, it's always good to grab some profit, so your risk is lower, of course. But what does that add up to? Well, after 10 and a half years, it adds up to a whopping plus 130,000%. Now, the funny thing is, if you divide 130,000%, if you divide it by 10 and a half years, and then again by 12 months, the funny thing is that it adds up to 1,000% a month. Do the math. 1,000 times 12 months is 12,000 per year. 12,000 per year times 10 years is 120,000. In fact, it's very close to 130,000. So because of the accumulation effect, the monthly gain in a way goes from 5.7 to a crazy number of 1,000. Now that, why is it 1,000 then? Because we're comparing a 1.3 million to 100,000. Is that really so? Let's take a look at the sheet I prepared here. 1,000 on average 5.7. Now, of course, 1 month would be worse, 1 month would be less. This is average, so it's not fully on the dot here. But after 2 years, the 1,000 account is 3,800 almost. After 4 years, the account is 14,300. After 6 years, it's 54,000. After 8 years, it's 200,000. After 10 years, it's 750,000. And after 10 and a half years, it's above 1 million already. All right. So that's how, it accumulates basically. That's with 1,000 then. So with 10,000, of course, those numbers will be higher, although the rate will be the same, the rate of change. So yeah, it's interesting how that can go, in my view, in the long run. But of course, there are some differences in real life trading, obviously, because this is an average, and we're not going to always have every month an average of 5.7. 1 month is going to be 10, 1 month is going to be 20, 1 month is going to be minus 10, 1 month is going to be minus 5, 1 month is going to be 2. So it's going to go up and down like that, of course, and that's going to change these numbers slightly. So obviously, this is just an average, so these numbers are hypothetical. But in the long run, the numbers could plus minus be around that range. Of course, I also have to always mention that historical testing and historical results do not necessarily guarantee anything for the future. That's a standard text that everyone says, but it is true and important to realize. But to me, as a trader, it gives me more confidence that the chance of such continuation is on my side and that there's a probability and an edge of trading that. That's how I view it. All right. Does that make... So I thought that was interesting anyhow, and shows the value of, I think, even the 5.7% on average. Now, with regard to, by the way, before I move on to the third topic and last topic, if you are interested in any of these EAs, I guess most of you are trading something, I suppose, but if not, feel free to go to services, our website, services, click on Forex and CFD. And there's an overview. Rush Ea here from Mislav Nikolic as first visible. Black Widow. Click on Black Widow to get access. You have to find the LOA, London Open Advanced. It's part of Black Widow. It's a separate module. Ultima EA, and the fourth is SUSE. Plus, you'll see, of course, information about our manual trading as well, or courses. So now let's close this and take a look what's going on with Ultima EA. So one thing I want to mention is that there's 5% risk per setup when you choose 5% risk per setup, obviously, right? So with the profit share model, there's two choices now available. Same with Rush EA, 3% risk and 5% risk. With Zeus EA, there's only one risk choice. But Rush EA and Ultima EA have both 3 and 5% risk per setup. That does not mean that the total risk is 5%. It just means that every single setup is 5%. But there could be multiple setups open at the same time. In fact, today is a good example where we have 3 buys open. Now, depending if you have a hedge version or a non-hedge version, Ultima EA has both. This is a hedge version that we're trading because there's also a sell open. But there is also a non-hedge because some traders don't like hedging and some traders cannot hedge, in fact, because of their regulations in their home country or in their country of residence. So every new setup is 5%. So this is 5% risk, one. A second is 5% risk, and a third is 5% risk. So at this moment, there's 15% risk trading to the upside. This is something that is normal for Ultima EA. It's not something that is rare. It's not something that happens all the time either. I mean, many times there's just 1 or 2 trades open, but I wouldn't say it's that rare either. It does happen, and sometimes even more. But do note that 2 trade setups per day is the max. I think per direction, or maybe in total. That I'm not sure, but per direction for sure, at the minimum. So there could be multiple trades open, but not more than 2 a day. So if there are 3 open a day, that happened over 2 days, not over 1 day. As you can see here, 7th of October and 2 on the 9th of October. Okay, if there are 4 open or 5 open, that had to happen over 3 days. All of them are different, separate entry moments with their own separate rules and their own separate kind of triggers. So each single trade is its own entity. All right, so that is something that Ultima EA does, and that at times is the reason why it makes those profit booms. But also, of course, it can make a loss, and there could be a bigger dip. But that said, there were yesterday only 3. From Friday there were 3 buys open. Today there was a sell added. That's because already there was a trigger for a downside trade. So, it does it nicely in balancing. Does a nice balance work here because the longs are not going as we would hope for. Let's face it. They were looking pretty good on Friday with this breakout, but the target didn't get hit. The target was 50 pips higher. Then we made a retracement and a bounce, but no follow through, unfortunately, although it looked good at that point, and there's a deeper retracement. So now it's already trying to, because of the bearish price swings, the system is already trying to adjust a little bit by adding a sell, so that even if the price moves up here, even if the price moves down, actually, there are 3 losses but 1 win, and win will compensate at least 1 loss. So there's actually only 2 losses in this case. If it goes up, the targets are now closer. Because of this bearish price swing, the Ultima EA works with dynamic trade management. Great stuff, so that it doesn't aim for those original higher targets because the strength of the trend isn't as, or the strength of the price moving up is not as strong. So those original targets seem now a bit too far. When it was moving at first, it was aiming at far targets, probably because, or I don't know, far, but at those targets, probably because it was with the trend, but also there was strong momentum. Anyhow, the main reason, actually, this is not really the reasons why it's aiming for that. It's based on the Fibonacci indicator and whether there's a trend or not. Okay, but what it does do is that if it doesn't reach that target and there's a bearish counter swing, it adjusts those targets lower, so it gets out earlier. So if it does move up, then It will hit the target sooner, and it will close 3 trades for a profit and 1 for a loss, and therefore still making a net gain, although smaller gain. Obviously, for us, it would have been much better if price would have broken above 118.14, above the 20-day right away. We wouldn't have had the short, and we would have had the possibility of probably 3 bigger wins. That would have been ideal. But the market does what it wants, right? It made a retracement instead, so the system adjusts. And if we lose, it's a smaller loss, and if it does go up, it's a smaller win. All right? So based on the retracement, the bearish swing, to me, that makes sense to reduce that risk. So that's how it did that. Would have been great and lovely if it wouldn't have made this bearish swing and would have blasted to the upside and had 3 big wins. That would have been even better, but we can't control. I mean, the market does what it wants. So the system, I think, very nicely adjusting to what happened. And yeah, you can see that there were 3 times 5% open, but it has been reduced. Now, will it always work like this? No, it will not. This is a great example, but in some cases it might not be able to do that because the system rules haven't been met, and that's part of the trading as well, of course. Okay, but primarily I wanted to make traders to be aware that it's not 5% risk in total; it's 5% risk per setup there. All right, traders. I seem to have lost my webinar here. It seems to be frozen at this moment. Luckily, it was right at the end, and I had nothing else to share. So appreciate everyone's joining today, and Yeah, I think personally, diversification is always the best. In my view, making a diversification in one's portfolio, always, of course, using savings in that, and then diversifying that partly with cash, partly with maybe more aggressive investments, and the most aggressive, of course, in trading. And within trading, then basically diversifying that pot of money that you're willing to risk into different systems and different EAs, I think makes a lot of sense, and it's the most risk adverse. So I think that is always a wise choice, of course, to diversify one's portfolio. And so take a look at this page. I think it will help give an overview of the expectations here. As you can see, there's some info per automated trading system and per system in general. And let us know, of course, if you need any help with that choice. All right. Otherwise, feel free to reach out to a lot of good info here on our website. Oh, you're not even seeing it. Sorry. There you go. So yeah, here's that choice. Apologies. Here's that choice here. And last but not least, before I end it, feel free to reach out, of course, to the blog, education section, or webinars. We've got a lot of live webinars coming up. Feel free to check out our sponsorships and tools and strategies, SWOT book, indicators, and the Forex and CFD pages. You will see the EAs and manual systems, and you can compare. You can build up a portfolio. All right, that's it, folks. Thanks again. Wish you all great trading, and see you very soon in the next video or webinar. Cheers. Bye-bye.